Hello everybody, and welcome to the first time home buyers seminar under 10 minutes. My name is Scott Putz. I'm the senior loan officer for Chicago Community Bank, 6 banks throughout Chicagoland. Today we're going to learn how to get qualified for your mortgage at our bank and how to get that $8,000 tax credit that the government is promising for first time home buyers. So we're going to do this under 10 minutes. Let's get started. Getting qualified consists of 4 steps. Number 1, evaluating your credit scores and history. Number 2, evaluating any current debts that you may have. Number 3, we're going to need to know how much you earn, and you're going to have to prove that. And finally, number 4, we're going to have to talk about any savings that you have set aside for the closing costs and down payment. Now, for those of you who do not have anything saved up or anything substantial saved up, not to worry, there are programs that can address that as well. Let's talk about credit scores. Your credit scores, along with your credit history, is provided by 3 credit bureaus, and you might have even heard of them. There's TransUnion, there's Equifax, and Experian. These 3 bureaus list all of your credit history, such as your payments in your automobile, your credit cards, that furniture that you might just have bought, and maybe even your utilities. The 3 bureaus each give you a credit score based on this history. Now, in today's market, you'll be expected to have a minimum score of 620. And by the way, 720 and above is considered a pretty good credit score. Finally, I would encourage all of you to take a look ahead of time your credit scores and your credit history at the various websites such as annualcreditreport.com. Next, current debt obligations. We're going to look at all of your current debts, assuming you have any, and then determine what your minimum payment obligations are. That's going to help determine how much you'll qualify for. Another thing is we're going to take a look at your credit card balances, again, assuming that you have any. Based on how much you owe, this could actually affect your credit score. Now, for those of you who have had a bankruptcy or even something such as a foreclosure, not to worry. 2 years after a bankruptcy, you'll still be able to qualify for a loan. 3 years after a foreclosure. Your income is an important aspect to this loan process. Regardless whether you're employed or self-employed, you're going to need to prove your income, and you're going to need to be either in the same business or the same profession for at least 2 years. Now, good news for you recent college grads, you're not going to have a 2-year history, and we'll talk more about that a little bit later. Now, for those of you who may not earn as much as you like in terms of affording that special house or that 2-flat that you're looking for, there's good news. There's programs available that will allow a non-occupying co-borrower get on the loan with you, and then that way you'll be able to pull your income together and then qualify for that loan. Okay, so now what are you going to be expected to bring in order to prove your income? Well, if you're employed, you'll simply need to bring the last 2 W-2 stubs. You'll also need to have a copy of the last 2 pay stubs. And then finally, you're going to need to bring copies of any assets that you may have, such as checking, savings, or retirement accounts, and the like. All right, now for those of you who are self-employed, you'll need to bring, once again, the last 2 copies of your W-2 stubs, if applicable. You may not actually pay yourself. Last 2 copies of your tax returns. And then the last 2 copies of your paycheck stubs, again, if applicable. And then copies of any checking, savings, or retirement accounts, much like if you're an employee. Okay, for you recent college grads, all we're going to need from you is a copy of your college transcript. We're also going to need a copy of your last 2 W-2 stubs, if applicable. You don't necessarily have to have a 2-year history. You only have to have a 6-month history. We're also going to need to have the last 2 copies of your paycheck stubs. And then finally, we're going to need to have copies of any assets that you may have, such as checking account, savings account, retirement account, and the like. Okay, let's talk about savings for down payment and closing costs. Now, traditionally, you might have heard that 20% is the ideal scenario. However, you may actually qualify for an FHA loan with a down payment as low as 3.5%. And that money doesn't even have to come out of your pocket. That can be a gift money from a parent or relative. Now, another exciting thing is that we have programs that will allow the seller to contribute as much as 6% of the loan amount toward your closing cost. Now, that could very well mean that all the closing costs are going to be paid for by the seller. Now, there's far too many creative scenarios to talk about in this 10-minute constraining time period. So I do encourage all of you to please contact me so we can discuss your particular case. Finally, and lastly, you have made it through the qualification analysis and you've proven your income, and you're now going to get, the same day, a pre-qualification letter from me with the Chicago Community Bank logo affixed to the top. This letter will allow you to begin your search for your property. Now, most sellers will not take you seriously unless you have this pre-qualification document in your hand, so you'll definitely want to get that out of the way. Alright, now we're going to talk about the government-paid $8,000 tax credit. It's available for all first-time home buyers like yourselves who have been pre-qualified. It's also available for those people who have owned properties in the past but have not owned a home in the last 3 years. Now, the way you get this money is you have to purchase the home first, okay? Because you have to have proof that you have bought the home. After purchasing your home, you may get the $8,000 tax credit by filing an amended tax return before October 15th. You do that, you'll get your money back this year. Now, if not by October 15th, the other option is to simply file your tax returns next year and get the $8,000 tax credit rebate at that point. Okay, so that's it. You've just completed the condensed home buyer seminar in less than 10 minutes. Now, you may have questions on your mind, and again, I would encourage you to please contact me in any of the ways that's going to be listed in just a moment. Also, please feel free to set up an appointment if you prefer to chat one-on-one. So, thanks for watching. I look forward to meeting and speaking with all of you, and good luck with your new home.